Good morning, all.
Hey, hey, hey.
Good
Happy
morning.
Monday.
Happy
Yes,
Monday, gang.
yes. Today is Monday, April 12th. This is Talent Talk. You have me, Jurgen Robinson, and to the other side, you
The other
have
side. Me, I'm Davina Clarity. Good morning. And down here is
Your boy Steve, I am back. Good to
whoop,
be
yeah,
back.
whoop. We have missed you, Steve. So good that you are in the house.
absolutely. And this is how we talk. Hey, Donna. Well, as we talk through things, we always invite a guest in. We want to keep you informed of what's going on in real estate, the things that we feel are important hopefully are important to you. And man, you know what? Took a bit of a week off, like physically was out. I feel like I'm in a daze. I feel like I need more time off. I need to go somewhere again.
Definitely. Vacation. I need a vacation and like to completely poop unplug.
Uh, a lot of fun. Steve, you doing well?
Yes, I am. It's a gorgeous day out. The sun's shining. It's busy. I mean, holy smoke.
Yeah.
Life is good.
And we've got a beautiful week lined up ahead. I see a lot of sunshine in the forecast.
Hallelujah. Hallelujah. Because, yeah, I literally went in my backyard. It was Saturday. Went in my backyard and just sat in a chair and I put some jazz music on and I put my head up to the sun and just zoned out I felt like it was only probably 30 minutes, but I felt like, oh my gosh. Yeah, it was great. Just the sunshine and the warmth in my face. Just fabulous.
Very nice.
Yeah.
You know, for everybody that is out there, our guest today is going to be talking about loans and mortgages. There's been a lot of activity in the market there. If you have any questions, drop them into the comments. We would love to answer your questions today. If you're watching later, I mean, it's okay. Drop them into the comments. We'll respond back to you. We'll get you the information that you want to know.
That's right. Yep. And like Jurgen said, we're talking loans today. And they go up, they go down, they're all
Great.
around, right? Yeah. What's a great rate? And what does this all mean for us and as consumers, on when is the right time to buy based on the rate and yada yada. So we're going to talk a little bit about that today, but we do have a trivia question, right, Steve?
We do. So before we introduce our guest, we have a quick trivia question for you. And this is it's a 50-50, 50% chance to get it right or wrong, true or false. You must have at least 20% of the purchase price as a down payment for a conventional home loan in order to purchase a home. True or false? Drop your answer in the comment section, and we will have our guest, who I'm sure is going to be able to give that answer away.
Just all you have to do is listen.
All you have to do is listen, and you'll know the answer. No, answer now. Answer now.
Yeah, and if it's going to be a good conversation because the mortgage conversation really has been with the rates, the movement during the first part of this year, really have been driving a lot of conversation and a lot of thought for people that are either looking to buy or even sell their home. Because oftentimes, even when you have to sell your home, what do you need to do? You need to buy a home too, right?
Yep.
So, David, who do we have today?
So actually, we are just really, we say this about our guests. We're excited to bring them on. We're actually honored that guests actually want to be available to just share experience and also information with us. So we are bringing on our guest from Priority Lending. She has been, so I was going to say she's been in the business since she was like 2. She started in 1993 in the lending industry. So she comes to us with a wealth of knowledge. She actually has been Priority Lending is actually a corporate lender partner of John L. Scott, and she actually does a lot with us here as well with talent. So she's our friend. She's local. She lives in the community, so she is invested 100% with us and with our clients and the people that she serves. So we are honored to bring in Senior loan consultant from Priority Lending, Tina Reeder.
I want to stick with that picture that was just on there versus my like live mug. Hi, everybody. Thank you so much for having me on. I totally appreciate it. And now when you say 1993, I feel like I should take senior away. Makes me feel really old.
You always get your early bird discount now.
I'm not that old, Jurgen.
I'm playing.
Although it could be good when it comes to shopping, I guess.
See? And Donna says hi.
Hi, Donna.
Tina, thank you so much for popping in and joining us and sharing some information with us this morning. As you know, I mean, we're all really busy and inundated with transactions and helping buyers get into homes and helping sellers sell their homes. And we talk about the environment with the low inventory and how it really is in a frenzied market. And we know that we're going to just get right down into it. Interest rates. Right. That's a conversation that we have been having. People have been refinancing over the months because of those interest rates down in the twos. And now the interest rates are kind of creeping up. And then it's like, oh, what do we do? So, as we talk about interest rates and as they were in the 2%, the low 2%, and now we're hinging up with those interest rates. Can you just talk a little bit about the low interest rates? Are they a thing of the past? I mean, are we going to get those back? And, where are we now and where do you see interest rates going?
I think interest rates are going to stay about the same. So the Fed isn't going to change prime. So they're going to stay around the same. I don't think that we're going to see them drop. I do think eventually we're going to see them go up due to inflation with all the spending and everything that we're doing right now with the government. With inflation, they'll go up. But 3% is still such a low rate because I think my first house, my rate was like 9%. And I had to do a 2-1 buy down to get the rate down. So I think it's always a good time to buy when you find a house and when you're ready.
Yeah.
Especially as we talked earlier, you're 44% you have 44% more wealth owning a house than if you don't.
And just in talking about the interest rates, as you mentioned, you were at 9%. I remember when we bought our first home, it was at 8.5%. And we were like, woohoo, the lender was like, ooh, rates are going down 8.5%. And we're like, yeehaw. And in the 80s, and obviously that was before my time in real estate. Tina, you were closer to your time. Steve, maybe closer to your time, you old folks. But anyway, they were like 17% or something like that. I mean, there's credit cards that are lower than the interest rates that were being offered then, and people were still buying houses. So just throwing that in there too, just wow, our perception of interest rates seem to be a little skewed when you look at where they had been in the past and how high they were.
Extremely skewed because 3% is still a great rate.
Yeah, absolutely.
Yeah.
It's crazy how low they are now and how low they've been coming. But, we've talked about inflation and rates actually increasing. How does let's say a quarter point, even a half point affect a buyer's purchase power?
So on a $400,000 loan, if you went from 3% to 3.25%, your payment would go up $54.41. So in dollar amounts, it translates to about $15,000 in purchasing power.
About $15,000 in purchasing power, which in this market
is a lot.
Yes. Not to mention the actual dollars spread out over 1 year, 5 years, 10 years. So
exactly. And then throw that in. And if you wait for 1 year and if the prices continue to go up 10%, now you're at a $440,000 house at 3.25%, and your payment just went up $228.49. And that equates to $55,000 in buying power.
Oh, wow.
So you throw in the higher rate and then the appreciation. And with the appreciation, some of the loans that I did just in July of this past year that were the Washington State Housing Down Payment Assistance. So they're upside down in their loans. Some of them, I've been able to save them $500 a month just by getting them out of an FHA loan. And then some of them don't even have mortgage insurance. So in less than a year, they've dropped $500. And I'm not sure if it'll continue. If prices continue, though, people can probably still get out of FHA loans into conventional and just get rid of the mortgage insurance. Or sell them for more.
Just get them out on the market.
And Tina, there's so much that goes into all this. You mentioned about appreciation, the mortgage rates, and there's credit that goes into there. Like there's so many different things that might tie into what a payment amount is for somebody. And sometimes people get hyper focused instead just on the rate itself or what's going on in the rates without taking that fuller picture. But we do know that rates are important. And I'm going to throw you a bit of a curveball because we didn't put this in the questions, but as you were talking about it, we've seen the rates really, really low, like in that twos for such a long time. And then at the beginning of this year, we started to finally see them raise a little bit. And people are kind of curious about where the rates are going to go, right? With that in mind, what are some of the things that, as a mortgage lender, what are some of the things that you watch to see what direction that the rates are going to go? Like, do you watch a certain index, or what do you look at to understand what direction rates are going?
So one, the stock market. So typically with rates, whenever anything good happens to the market, the interest rates go up. So if the stock market goes up, interest rates go up because they want to raise the interest rates so people buy the bonds to keep on there.
Okay, good news in the stock market, bad for mortgage rates.
Exactly. So if you think of anything bad for the economy, they're good for rates. They work in the opposite way, typically.
That makes me feel like I got to root against the economy.
Yeah, not right now. I mean, rates are still low, but yeah.
They're super low.
When people dump their stocks, they're getting into the bond market, and that's why the rates are lower.
Okay.
So it's not like you wish anything bad on the market. 3%, it's still a great rate. It really, truly is.
Low.
Yeah.
Yeah. Anything else you kind of watch to forecast out where rates are going or what direction we might be looking at that?
So the other thing I watch is a commentary from Market Watch on there that kind of lets us know like when the rates are going up, how long they think the rates are going to go up. And, typically when rates spike really high, like overnight, kind of for no reason, you give it a little bit of time and then they drop back down. But right now the market is just so jerky because nobody really knows exactly what's going to go on. So it's just kind of a knee-jerk reaction. And some things this year, they just don't even make sense. I've never, ever seen it in my entire mortgage career.
So you're watching the markets, you're watching industry resources to kind of help the prognostication there. And does the Fed have anything to do with that as well? Or is that something you watch at all?
On the Fed, we watch that too. So if the Fed, sometimes they'll say things that they shouldn't say, and then the market reacts and rates will go up, and sometimes the rates will go down. But at least
are you saying people are reactive?
Very reactive. But they're really anticipating that at least prime will stay this way for the next 1 to 2 years because the housing market is the biggest driver of the economy. So they have to keep it stable.
That's good to hear.
I think you guys can answer this better, but I know at one time, for every one purchase of a house, it employed over 10 people.
Yeah. I think that's around the stat that I recall hearing as well because of the impact of home building, the people that are engaged in a home sale. Yeah. It's a trickle-down effect.
Yeah, and there was a dollar amount that was connected with that. It's like a certain dollar amount goes into the economy when you purchase a home, and it was pretty significant.
Yeah, I think it's about $1 billion.
Don't listen to Jurgen, right? Just not at this moment. There's so many things to consider though, and for a first time home buyer, even someone that is a repeat buyer, and trying to figure out, when is the best time to purchase. Some people are having to purchase because of, whether it's job change or having to move because of job change, and they're saying, okay, should I rent or should I purchase? Or maybe they just want to take advantage of the market, or maybe they need to move up or downsize, or whatever the situation or scenario is. There's a curiosity out there, but just not wanting to take that step because of the fear of the market's up, the market's down, coronavirus, how's that going to have an effect on everything? Or, prices are up, or will prices go down? And what is coronavirus going to have? I mean, like, there's so many questions that are looming out there that we don't have answers to. And people ask us, well, what would you do? And we can't tell them what we would do, because our situation in life is not based on what their situation in life is. And every decision is very personal. But, at the same time, buyers want answers. And so if someone is literally sitting on that fence, like, it's almost like gambling, right? Like waiting for, sell low, buy high, or buy high, sell low, or whatever the case is, what would you say to that buyer that's just waiting for things to settle down, prices to come down, interest rates to stay low, and they're just waiting to purchase and not doing anything in this market right now? What would you say to them, Tina?
I guess the biggest one that I do is bring up examples of people who've started 1 to 2 years ago looking for a house, and now they're priced out because they were waiting for the prices to decline, and they just haven't happened. And a lot of people have 07 and 08 in their heads, which is completely different, because people actually qualify for homes right now. It's a true buyer demand. There's not enough houses. I think rental houses will start hitting the market, but there's still so many buyers that are looking. And the other thing people are very fearful of are foreclosures. But we have to remember that people have equity in their houses. So before they foreclose on their house, they're going to sell it. When we do refinances, you're not pulling out 100% on a VA loan now. It's only 10. FHA, you have to have 15% equity. Conventional, you have to have 20. So houses can't be used as piggy banks any longer either. And then with COVID, the banks are working with people to do the forbearance. So we're not going to see a huge foreclosure. And I think people get this mixed up with 07 and 08. And it's completely different, especially the fact that people are qualified to purchase homes. So they have like a loan quality number, and a good loan quality number is like 225. In 07 and 08, the number was 800. The higher being worst, we're at like 125 now. Yeah. So people buying houses are actually qualified to buy them.
We reference, and Steve, I'm going to turn it over to you here, but we reference 07, 08 quite a bit. And memories are short, though. It almost seems like a boogeyman now to talk about it, because a lot of home buyers weren't even in that market. And it just, we know it was there, but we don't always understand what happened. Or I don't think a lot of people necessarily understand what happened. So it's interesting.
Yeah. But then you have it's hard right now. I don't know. I just encourage people, if they're ready to buy, and especially if you're going to live in the house for a long period of time, even if the market does go up and down a little bit, it should still appreciate.
Yeah. Tina, you mentioned talking about, if you're ready to buy, now it's the time to do it. Interest rates are still low. But, one of the things that we're seeing is the challenges that we're seeing with working with buyers, or even buyers out there who are looking to purchase, is that there's not a lot of inventory. So what are some of the things that you've seen buyers do to maybe win maybe a multiple offer situation?
So for me, one is coaching the buyers to be realistic about their earnest money, and just comparing, like, if you had a house for sale, would you take somebody with $500 or 1%? The next thing we do on the loans, except for we can't do them with the down payment assistance, is I actually get them pre-underwritten. So they've already gone to the underwriter and everything is completely done on them. And then we have a 10 business day close loan, which has been kind of a blessing too, where if somebody needs a really quick close, they can go in and do the 10 business day close. And then the sellers rent back the house from the buyer for free. So those have been the biggest ones. And then to bring buyers in non-contingent, We have a bridge loan that they can use on their existing property, so they can go non-contingent. And we also have a line of credit that we can put on their existing property if they have enough equity. And those work beautiful. So if you have a house with a bunch of equity in it, we can go ahead and we can get you pre-underwritten. Your down payment can come from your existing house, and then we put a lien on it, and you have 6 months to get rid of your existing house. So on those, you have to be able to qualify for both house payments, which right now a lot of the buyers actually are qualifying for both.
That's incredible. Now, you know what? Anybody that is in the Facebook land, Instagram land, wherever you might be watching this land, if you have any questions, now is a great time to ask, because you're talking to an expert. So with a lot of experience. I'd say it's one thing to be an expert. It's another thing to actually have experience in what you do. So Tina, you are eminently qualified to answer these questions. You know, one of the things too is, okay, so you mentioned a bunch of different programs, and if anybody's curious, ask about those programs. It talked about a bridge loan, talked about pre-underwriting and some other strategies that could help you purchase a home. But a lot of people who need to purchase a home also need to sell a home, right? So are there, actually, we just talked about the bridge loan, so I'm just going to roll right past that. If you are considering buying a home, when is the right time to talk to a lender? Do I wait until I've already found the home? Do I start earlier in the process? Tina, when do I start?
I think you want to start right away so that we can see what your credit is. We can structure you. We can get you ready. So let's say your credit score needs a little bit of help. I can actually do a simulator, and I can tell you how to get your credit score up. And for you, Jurgen, I would charge you nothing.
Isn't that just for me?
Because I like
everybody.
Davina, it would be a coffee though, just because then I would get to go out for coffee with Davina. But maybe I would.
Okay.
I think it's really a great thing, because you know what? Everybody goes off of Credit Karma, and we know how accurate Credit Karma is. So they're really shocked when, there's 720 Credit Karma, it turns into be 620. And then they're really angry with me because I knocked that many points off their credit, because it was just 720 when they pulled it.
Yeah.
So
and
it was fun.
A lot of people are nervous when you mention credit. Like, how do you walk somebody through that? I mean, because it feels almost like it feels like getting naked in front of a crowd, right?
So that part is super easy for me, Jurgen, because I had a period of time, sorry about that, where my credit was really, really bad due to divorce and car accident. So I'm ultra sensitive to other people, and stuff happens. And you just have to let people know it's okay. There's some people who are habitual and it's going to be horrible. And there's other people where something bad happened. And then sometimes just talking to people, it's just that they don't have a credit card. So it's just an easy fix for them. So more times than not, it's just lack of credit and being compassionate and not being rude. And once I feel somebody kind of going down where they do feel very embarrassed about their credit, I just share my past.
That's good.
Yeah.
That's funny. Yes. Yeah, Adina, that's good. You know what? I want to ask you, because Adina's like Credit Karma, it's scary. And that is really a question to ask you specifically. Why is there such a difference between the online valuator or the online credit, and then what they get from, even when you go buy a car, those are different as well. Why is there such a huge disparity in the numbers from mortgage to the credit scores?
So there's different types of scoring models, and we use the FICO scoring model for mortgages. So it's more conservative than even the one for the car. And I think Credit Karma is Vantage. And I think if you even look on Credit Karma, it says it's not an accurate score on there.
Gotcha.
So typically what I do, because people get really, really angry when their score doesn't match Credit Karma, is I just kind of send them an article about Credit Karma and those scores.
You said something that I think a lot of people don't understand, and I know I didn't understand it, is there are different scores for different things you might purchase. the home purchase is operating, like you said, off the FICO. And if I wanted to go to a store and get an in-store credit card, that's going to use a different score as opposed to buying a car or something else, right?
Correct. Exactly. Yeah, scores are an amazing thing. And just different tiers too. So even sometimes when you can get up 20 points and it's very easy as paying a credit card down $30, I let people know because we all like lower interest rates.
Yeah.
That's right.
I feel like Credit Karma is the Zillow of real estate. Just
It totally is. But you know what's funny is I'll actually tell people to go to Credit Karma to watch like when something hits their credit score, so we know when we can do a repull on there. So it's a good gauge to kind of watch your credit to see that it's going up versus down, but it's just not quite as accurate as a FICO. And that's the other things too clients don't know is when they're shopping, if they go to Navy Fed and have their credit pulled and they want to go to other lenders, there's absolutely no need for them to have their credit pulled again. As long as you're comparing apples to apples and you're using that same mid score, there's no reason to go to 3, 4, 5 different lenders to have credit pulled.
What if I just want to, though?
You can if you want to, but some people are really freaked out to do it, and there's not a need. I mean, if you're going to go compare, all you need is that middle credit score from everybody. Yeah. And I think if a lender is telling you have to, I think that you should run away because you have to.
So as long as you have this, so as long as the lender has given you your middle credit score, then that's all you need. So you shouldn't have to go from lender to lender to okay. And exactly. What's the impact? So is there a forgiveness or less of an impact if you're getting pre-approved by multiple lenders in a period of time?
So within 30 days, they give you like kind of so many pulls that you're going to want to shop for a car, or you're going to want to shop for a mortgage, but some people just don't want to have their credit rerun over and over again.
Yeah.
And that's good.
Yeah.
Makes sense. Tina, thinking back, you've been doing this since 1993. Any stories that maybe come to mind that stick out that over the years that maybe you've helped clients out overcome challenges? Maybe interesting stories that you'd want to share?
So when I started in 1993, there were no credit scores. It was all handwritten letters. So it was the most amazing thing ever. So I became very good at writing letters of explanation to get loans for people, which kind of comes in handy now because it comes in handy now because sometimes we still have to write really good letters of explanation for clients. So it's one advantage of, 07, 08, it didn't even matter. Anybody got a loan. So
they still had credit, but not credit scores.
Yeah, we just looked at the credit report, but there was no scores. So it was really easy to write letters for people to get them loans. And back then too, they would do it like, okay, well, we won't give you a loan today, but in 6 months, we'll give you a loan if you don't have any more derogatory credit. And they did. So some things were actually easier back then. Well, and rates didn't change. They came off the fax machine. So they just posted them on a bulletin board and that was the rates for a week.
If somebody wasn't telling you they were good or bad, how could you possibly figure it out on your own?
It would tell exactly. Everybody was good because I wanted everybody to have a loan. Some just had better letters.
Wow.
And VA too. Right now for me, it seems like people are so against VA loans and the appraisals, and they think that they call everything out on the appraisals. And they really aren't, unless they're like a health or safety issue. VA is not calling things out. They're calling the same things out as FHA and conventional on there. And your appraisal lead time is quicker. You'll get it back in 14 business days on there. And some people, which it's been years and years. So VA used to call out, like if there was a cracked window pane, you had to replace it. And some people still have that image in their head that it has to be replaced.
Yeah.
So, education.
So from a lending standard part, most of the lenders are looking right about the same thing, right?
Yeah.
Yeah. And then, is there anything else that you might suggest to a buyer, or that you help buyers out with in terms of helping to separate themselves out from the other competition for homes, because it is really tight? And I know you touched on it earlier. Is there anything else that you can think of that might be advantageous for one of your clients?
So the biggest thing for me is to get pre-approved. Even if the seller doesn't want the quick close, to go in with a 10-day close. I feel like the agents that are reaching out to the listing agents to ask what the buyers want have a better chance. And then I've been following up with all the listing agents also on the clients and letting them ask any questions or go to my Google, or a lot of it's communication that people want on there. So the biggest ones for me have been to do the 10-day close and to be pre-underwritten.
Yeah.
And
that's one of those separators that you mentioned is there are a lot of online lenders, information that you can get, but that personal touch can really be a separator, a differentiator.
I'm finding that the listing agents don't want online. And even I'm working on a loan for a gentleman who works at Chase Bank, and he won't even use Chase Bank because he knows that people don't even want the big banks. And I'm finding too local. The listing agents are all asking me if I'm local. So everything we have is local. My underwriters, my processors. I think we are up to about 8 funders now. And then when our underwriters are overwhelmed, they just go into a queue, and people actually from around the country will grab them so they can get everything done.
Great.
Quickly.
That makes me feel comfortable.
Well, that's really cool though, Tina, and just knowing you and having done transactions and business with you before, is like you literally will meet face to face with the clients. You will, whether it's a coffee or whatever the case may be, you will go to them so you can have the one-on-one hand holding. She is the greatest hand holder ever. I can say that and you said, when you talk about a story, there's one that does come to mind, and you know who I'm probably talking about. Tina, she's a single mom, was having a really hard time finding a home VA because of condition. She had already worked with a couple of different lenders, and she had some hurdles that she needed to get through with her finances, and was literally ready to give up. And then Tina, with her crown, shows up and literally holds her hand. I mean, like, she was at the point of tears, holds her hand, gets her through. We find a home. Tina closes on the loan, and she gets to move her family. She was taking care of her mom. Then she had her daughter, and then her daughter ended up having a grant. So she's got her mom, herself, her grandchild. And so she was able to rally in and have a home for her family. And it means so much even to her to this day. And that was like a huge win. For someone that was super discouraged, didn't think they'd ever be able to be a homeowner, had rented all their life, disabled veteran, single, and taking care of family. And she now has a home that has now appreciated over the years.
Yeah.
So
she is such an amazing lady.
Yeah. So
I love meeting with people one-on-one. But next time when, I don't know, your client, Davina, works for Starbucks, can you let me know so I don't bring them to a different coffee shop? I like meeting people one-on-one because I think they feel more comfortable. And like I tell people, you're not buying a bike, so you have to ask questions. And I let people know, anytime you have a question, no matter how dumb you think it is, ask me. I've been doing this for so long, and I've just been doing it and things that run through my mind. So I'm kind of a gray person. So if I can find the gray area on loans, I do. And I don't mind going to my underwriters and letting them know that I'm right.
I love it.
Yeah.
I love it.
Okay.
Yeah. And we have amazing underwriters.
Yeah.
Yeah.
We just reached the end. Oh,
yes.
Go ahead, Steve.
Tina, thank you for coming on.
Thank you guys so much. Enjoy the sun.
Absolutely. And before we leave, just do you want to drop your your contact information. We'll also post it up, but
Okay, I put my cell phone in there.
okay.
And then do you want me to put my website in there too?
Sure. We'll
Okay,
get,
I can do that.
we'll get that posted up for you.
Yeah. What
We'll
is your
share that
website? Go ahead
information.
and tell us
It's
what.
loansbytina.com
Loansbytina.com.
for anybody to qualify too.
Super
Yeah.
easy.
Reader's too hard, they'd spell it wrong.
And then your phone number, the best way to contact you actually is your personal cell phone,
It's
right?
my personal cell. I don't even know my office number. So it's my cell phone, 253-230-082.
Very nice.
Awesome. And Tina, you've been definitely a great asset. Great to have you on today. And one of the things too is just even calling, and I have to say I've called you really late at night and you've done some, not saying to do that, but it's not like working with a bank from 9 to 5 or 8 to 4. This gal works after hours and weekends, and we'll get back to you as well when you have.
You did. I think it was like 9:41. It really was 9:41, but they got the house.
I love the way Tina knows the exact time. It was 9:41.
It was because we were sitting down to go watch a TV show and Davina called, and then I ran upstairs and then I talked to the clients at like 10. But they got the house. That's all that matters.
Right.
So just when it's skiing, but ski season's over. Yeah. So it's all good.
Awesome. Well, Tina, thank you again for coming on. We look forward to next time.
Do you want to read? You popped the trivia question on while Tina's on. Do you want to tackle the question? Yeah. Okay. Let's do that.
True or false? You must have at least 20% of purchase price as a down payment for a conventional loan in order to buy a home. Tina, bring us the answer.
So false, but I want you guys to tell me what the minimum down payment is on a conventional loan.
Okay.
The lowest minimum?
Yep.
In my mind, it's 3.
Good job, Jurgen. That is perfect. Yes. Yeah. Home ready or home possible. If you're below the income limit, it's 3%, which a lot of people don't know. And you don't have to be a first-time home buyer. Oh, and you can already own another house.
What?
Whoa.
Did you know that for down payment assistance? You can actually have 2 houses on down payment assistance.
Oh.
No, I don't know that I knew that.
I didn't know that one.
I didn't either.
That should have been our trivia question.
Yeah.
That should, exactly. I know, right?
Wow. Yeah. That's good to know. That too, and that reminds me of the VA. You can have multiple homes on a VA loan too. I think a lot of people don't realize that.
Yes, you go off of the rule of thumb is you go off of whatever the jumbo conforming limit is. And then if they have like a $300,000 house, you back that off of it. And that's what they have left to buy a new house. And if they have no eligibility on there, then we go up to 2 million, but it's unlimited. And you can have a foreclosure and you can have a short sale on your VA certificate too.
Well, that's some ins and outs that a lot of people don't know. So definitely reach out to Tina to get the know on the loan and to get more information about the different rules that may apply to you to help. So,
yeah.
Thank you.
Perfect.
And
thank you guys
says,
so
thank
much.
you very much.
Have a great day.
All
Thank you, Tina. Enjoy the sunshine.
Thanks.
Yay.
Bye.
All right. Bye.
What a great guest. Lots of great info too.
Mm-hmm. I was like, the screen. I'm here. I'm leaning in.
That's what we should always do when we're learning. We lean in.
Yeah.
Not lean back.
Yeah.
Only with the music. Steve, we got a couple of, we're right at the 9 o'clock mark. We've got a couple of things to cover that are going on this week, and then we'll be saying adieu.
Yes, we do. Do we got the banners up? Wednesday business meeting for our John L. Scott brokers from 9 to 10 a.m. Always got some great stuff. Action-packed business meeting. The next thing up that we have is our Forums Friday. from 9 to 10 a.m. You can log in and register for that. If you're a real estate broker, want to come in, you can come check us out. Go to our webpage or go to our Facebook page to register for the class. And we also have our market update on Friday, Talent Report Market Update with Jurgen and Davina. They will give you the new listings coming on the market, open houses, and catch you up with what's going on in the real estate market here in our local area. We also have a career night as well coming up. And if you are interested in getting your real estate license, please go to our Facebook page or our website, and you can register for our next career night if you are thinking about getting your real estate license. So I think
That's coming up in 2 weeks. It's amazing. Like our months are just flying by too fast.
They are. Things are. I mean, it's just it's busy. The sun's out. We're getting past some challenges that we've had here, and it just seems like time's going by.
Yeah, normally April 15th coming up here would be tax day, but that's moved into May, just pushed out a little bit. There's a happy anniversary, or is it happy? No, actually, there's a happy birthday to agent in our Lacey office, Ryan Fieldson. We also have a anniversary yesterday for Scott Hollis. So yeah, things are happening.
Good things. Good things are happening.
Happy anniversary.
Yep. So, all right. Well, I guess it's that time. It's straight up 9 o'clock.
All right, guys. Let's wrap this up. Who's ready to bring us home?
Steve, why don't you take us home? It's been a while.
All right, guys. Let's do this. Thank you again for tuning in to another week of Talent Talk. We will be back again next week, Monday at 8:15. Hope to see you then. All right, guys, on the count of 3, let's get a big be bold. 1, 2, 3. Be bold.
Bye, y'all.